Hi there, Mr. Holcomb here with another episode of The Math Behind the Modules. Okay, chapter 6-3, income statements. So over on the right here in this red box, I have all the vocabulary from this chapter section. So let's go through that really quickly first. And for one, gross pay. Gross pay is how much you make before any withholdings. So if I make $20 an hour and I work 40 hours, my gross pay would be $800. 40 hours times $20 per hour. Net pay is what you take home after federal taxes withdrawn, state taxes withdrawn if there is any, Social Security or the FICAs, as well as Medicare. If you invest in or contribute to a retirement account, that gets taken out, and all these deductions, health insurance, dental insurance, life insurance, anything that is taken out, everything taken out, what's left in your paycheck that goes into your direct deposit, if you will, into your checking account is your net pay. Take home pay is basically the same as net pay, which you take home after all the deductions. And I think we all know what a paycheck is. I'll skip that. Form W-4. A W-4 is a form that everybody has when they work for an employer. It shows their federal tax, their state tax, and their FICA, and it determines how much taxes you have already paid. Withholding tax, we'll get to after, maybe. A W-2 form. Well, W-4, well, let me just see. Let's go back to W-4. Okay, so a W-4 form is a form that is filled out by a new employee that gives directions to the government on how much money in taxes to deduct from that employee's pay. So the W-4 form is what you fill out when you get hired, so your employer knows what to deduct from you. Okay, I wanted to make that clear before I continued on. A withholding tax is federal, state, and local income taxes that are withheld by an employer who then send them to the government for you. A Form W-2 is a form that is used to report your withholding data, your wage, your tax statement given to employees to compute federal, state, and local income taxes. And a copy of 2 is submitted along with your tax forms when you do your taxes. A 1099 form is a form that reports other income. If you wait tables, your tips would be on a 1099 and that kind of thing. So a form used to report other income made from interest on bank accounts, interest from stocks and royalties, tips, that kind of thing would be on a 1099. Tax deferred contribution is just simply that. If you contribute to something like your retirement, and then if it's a tax deferred contribution, it means they take it out of your gross before applying a percentage to your pay. In other words, your taxes would not be taxed. So let's just say I made $2,000 in my paycheck and I put $100 into a tax deferred contribution to my retirement. Then I would only be taxed $4,900 for federal and state and so on, okay? Tax deferred. A cafeteria plan, no, that does not mean eating at work, okay? That does not mean the food you buy at work. It is a portion of a pre-tax wage that is set aside for payment of certain medical, child care, parental care, and non-reimbursed medical insurance expenses. So a cafeteria plan is just pre-taxed wages set aside for certain medical conditions. A flexible spending account, or an FSA. It's an employee-sponsored cafeteria plan in which employees choose to deposit funds that will be used in a specified 12-month period of time. This is a use it or lose it plan, usually, okay? If all of the money in the plan is not spent by the end of the 12-month period, the money cannot be returned to the employee. So a flexible spending account, you don't want to put too much in there because if you don't use it, it's just throwing money away. Okay, so there is a quick look at the vocabulary. Now let's take a look at example 1. Okay, so Barbara Barbara started her new job and wants to verify her net pay has been computed correctly. Her gross pay per pay period is $469.75. She has the following deductions: Social Security tax 6.2, Medicare 1.45, and $110.50 federal withholding, state withholding 66.62, and retirement contribution of $9, disability $256, medical insurance $12, dental $6. What should her net pay be? Let's hope there's any left over for her so she can eat. So Social Security tax is your gross, $469.75 times the percent of 0.062. So that is going to equal, let me get my calculator out and clear it, $469.75 times 0.062 equals, oops, I don't need a parentheses, I didn't use one, equals $29.12. Okay, Medicare tax would be that $469.75 times 0.0145. And when I put that in the calculator, 469.75 times 0.014, I get $6.58 when I round. Okay, add all of the deductions to determine the total. So we're going to take, I'll do it over here, 2912. I don't like adding horizontally, I like adding vertically. 658. So there's Social Security, there's Medicare. Federal tax is 110.51. State is 66.62. Okay. $9 for retirement. $256 for disability. This is a 0, by the way. $12 for medical insurance, $12, and dental, $6 per paycheck. Okay, so when I do that, let me just clear this. 2912 plus 658 plus 110.51 plus 66.62 plus $9 plus 256 plus $12 plus $6 equals 242.39. Subtract deductions from gross pay. So I take that $469.75, which was gross, subtract $242.39, and I get 6, and this is now a 6, so 3, 9 minus 2, 6 minus 4, 4 minus 2. So after all of these deductions, take home pay is $227.36. Okay, I made a mistake here when I was calculating my Medicare. It's not 0.014, it's 0.0145, so it's 681. So let me just fix that. So I forgot my 5 here. So that would make this 6.81. So that's deducting another 68, 78, 23 cents. So I didn't deduct enough. So subtract 23, and my answer should be $227.13. Okay, apologize for that, but I forgot my decimal place, my thousandth of 5. So the answer should be 227.13. Okay, so now let's check your understanding. Pause the video, see if you can answer this question. And here we go. It says, what percentage of Barbara's gross pay for her pay period accounts for all of her deductions? So all you have to do in this problem here is take her total deductions, which was what? 242, I said 39, but I had to add another 23 to make it correct. And that was 12, 4, 5, 6, 2, 4. So her deductions were 242.62. and her total pay was $469.75. So you just put that in your calculator and you get the answer. 242.62 divided by the total gross pay, 469.75, enter, and you get approximately 0.51648, or what's it say, round to the nearest 0.1%. So it's 51.6%. That's a lot, okay? 51.6%. Okay, example 2. It says to examine Lorna's biweekly pay stub. Assuming that Lorna's salary and deductions remain the same throughout the calendar year, how much will be taken out of her total annual gross salary for federal and state? Okay, so the first thing I need to look at, or we need to look at, is what is her pay period? So here's the pay period right here, March 15th to the 28th. Well, 15 plus 14 is 29. So you count the 15. This is 14 days. So that's 2 weeks. That's bi-weekly. And that's our starting point. So our deductions are, I took my highlighter off too quickly. Federal is right here. And state is right here. So we want to see how much we're taking out of those two for an entire year. So since she gets paid bi-weekly, that's 26 pay periods a year. Okay, so if I take that 1,147 and multiply it by 26, that will tell me how much federal will be taken out a year. Okay, so 1,001.47 times 26 pay periods in a year is $26,038.22. Okay, so that's our Fed. Okay, so I'll just put F here for Fed, and then we'll do state. State taxes are $280.89. So $280.89 times that same 26 pay periods will give me 280.89 times 26. 7,303.14. Okay, so it says how much will be taken out of her total annual gross salary for federal and state. So this much will be taken out federal, this much will be taken out state, and that is a total of $33,341.36. Okay, so now pause the video, do the check your understanding, come back and see how you did. Okay, so for the check your understanding, it says employees can choose to increase their tax withholding if they feel that the amount calculated for the tax deductions may not be enough to meet their total tax responsibility at the end of the year. So if that happens, you're going to owe at the end of the year, you're going to owe a large sum all lump. And a lot of people will want to avoid that. They'd rather pay pretty close. You want your taxes to be near zero, but if anything, you want to overpay just a little so that you get money back rather than having to pay in more at the end of the year. So from her past records, Lorna knows her total tax responsibility is usually 30% of her annual salary. At the rate of deduction shown on this stub, will Lorna's employer have taken enough out of each paycheck to meet her tax obligation for the year? So if we're going to talk about tax obligation, then we're probably talking about all the taxes, which is right here. These are the taxes. Social Security, Medicare, federal are all taxes. So if I look at those four and I go into my calculator and just enter these values, I could write these all down, but I'm just going to do it in my calculator for this problem. It's 280.79 plus 6567 plus 1001.47 plus $280.89. So my total tax in one paycheck is $1,628.82. If I divide that by my pay, that'll tell me the percent that goes to taxes. Now I just do a division and do her biweekly gross pay, which is $45.96.39. And when I enter that, I get 35%. So 35% is more than 30%. So the answer is yes. 35% is more than 30. She is paying in enough, and she'll get a tax return at the end of the year because she was overtaxed. Okay, example 3 says, on January 30th, Joanne Toscano received this W-2 form from her employer. How much did Joanne pay in taxes during the year? So if we look at this, federal income tax withheld is box 2. So let me just get my pen here. I thought I had already done this, but anyway, here is box 2. So there's federal tax. State income tax is box 17 right here. And local income tax is $1,092. Okay. But this question's not being really clear. There is also what they call a Social Security tax, which I'll do in blue in this box. And there is a Medicare tax. Let me just move this. That's Social Security tax. And there is a Medicare tax. And the Medicare tax I'll do in green. Medicare tax withheld. So if I were answering this question myself, okay, actually what I did is I looked at the key when I did this, and I'm like, all they're adding are the 3 reds, but Social Security tax withheld is a tax that's withheld, and Medicare tax is a tax that's withheld. So I'm going to do this as a total tax withheld. How much did Joanne pay in taxes? So they're all taxes. So I'd take $15,851, and that was federal. State was $5,344.50. Local would be $1,092. Okay, and a local tax could be a city tax if you live in a city, or a town tax if you live in a township. So I'm going to do this 2 ways. I'm going to show 2 answers. Okay, so what the book did was they said, okay, take federal, state, and local and add them up. And that's the answer to this problem. That would give me 7, 13, and 9 and 9 is 18. Carry the 1, that'd be a 12. Carry the 1, and that would be 10, 11, 12. Carry a 1, and it's $22,287.50. But I don't agree, because Social Security tax and Medicare tax are taxes. So I'm going to add another $4,733.70 for Social Security. Can't forget our FICA, guys. And $1,107.08 for our Medicare. Now I'm going to add all these together. My federal, state, local is in black, and the other 2, the FICA's in green. And I'm going to get, oops, I'm only looking at the green here. I'm going to add these 3 up. 0 plus 0 plus 8, 7 plus 5 plus 0 is 12. Carry the 1. That'd be 10, 17, and that 1 is 18. Carry the 1. 11 and 1 is 12. Carry the 1. 3 and 7 is 10, plus 1 is 11. Carry the 1. 3 and 4 is 7, plus 1 is 8. And nothing to carry. Whoops. And bring down the 2. So I believe that this answer should be $28,128.28, not $22,287.50. We have to include FICA. So now check your understanding. Says, what percent of Joanne's gross income did she actually take home? So take home pay, what percent is out of 100? So what part did she get of her total is what they're asking. Okay. So her wages, tips, and other is $76,350. There's nothing in 12 and there's nothing in 14. 12 is non-taxable pre-tax withdrawal, and cafeteria usually ends up in 14, and that's non-taxable, but there's nothing there. So her 1 and 3 are equal. Your Social Security wages would include those deductions where the wages, tips, and others would not. Okay, so anyhow, so now there's two ways to look at this question. Are they talking about the 22,000 or the 28,000? So what percent of Joanne's gross income did she actually take home? So her gross is $76,350. That's the whole, and a percent is part over the whole. So if that was her total, she took home the difference. Let me get the calculator. Okay, you don't count the tax as that. It would be what percent of tax did she pay? If I put the tax up here, that's what we're going to calculate. But if let's do it both ways. Let's do it with just federal, state, and local first. And I'm going to take $76,350 minus the taxes, which is $22,287.50. And that is going to be my numerator, $54,062.50. That's what she took home, not counting FICA. And that percent is, so now I just divide that by 76350, and I get about 71%. Okay, and then when I look at the key, I got over here, let's see, that was check your understanding, and they said 63%. Okay. So how did they get 63%? If I now take the total tax, which is 28, now let's see what that's going to be. That would be my total, 76,350, my gross, 76,350 minus all the taxes, including FICA, which is $28,128.28. And I get $48,221.72. $48,221.72. I believe that's what that said. Yes. And I'm going to divide that by my gross, which is 76,350. The gross never changed. So now I take that 48,221.72, divide it by 76350, and whoops, what did I hit? And hit enter, and we do get that 63%. So the book has a discrepancy there. They said that the answer to example 3 was 22,000, but then the check your understanding used this value, which they didn't use here. So anyhow, there's the two possible outcomes. If you did not calculate your FICA in, that she paid 71, or she took home 71% of her pay. But now when we're calculating FICA into it, she only took home 63% of her salary. Okay, example 4. Amy Springfield works for Pound Ridge Financial Planners. Her employer uses an electronic W-2 form as shown below. So it says e-file right here. That tells you it's electronic. What accounts for the difference between her wages listed in box 1? So let me put a box around that. So what accounts for, all right, get out of my way. I can't put a box around box 1 if you're in my way. Right here, box 1. What accounts for the difference between her wages listed in box 1 and her Social Security and Medicare wages in box 3 and 5. So 3 and 5 are right here. Okay, why is 92,100 down here, but 78,900 up here? All righty, well, that's a simple solution. And if you look at E, or actually it's 12A, and they put an E in here, exempt, that's what that means, tax exempt, $12,200. And then if you look down here, this is the cafeteria plan, which cafeteria plans are used to take money pre-tax out of your pay to take care of medical, dental, different fees, and it's pre-tax. Okay, so that's what a cafeteria plan is. So if I take that 92,000, which is what the Social Security wages say, and I subtract $12,200 from that, Okay, that is the tax exempt amount. That would become a 1, 11 minus 2 is 9, and this would become an 8, and this is an 11 minus 2 is 9, and 8 minus 1 is 7. That knocked us down to $79,900, and now we have a cafeteria plan of $1,000. And if we subtract that from our gross and our exempt, then we're going to get $78,900, which is what's up there in the wages column, what they call line 1. Okay, and that's where that comes from. Okay, so it says, check your understanding. Amy pays 20% federal and 7% state tax. How much did she save in taxes by putting money in her tax deferred and flexible spending account? So in other words, let me extend the page here so we can move when we have to. Actually, let me move this all up. Okay, let me put this like right up here. And that's my 20%. There's my 7%. There are my notes. There's my highlights. And now let's answer this question. So since this $12,200 was tax exempt and the cafeteria plan of $1,000 was tax exempt, that is a total of $13,200 that she does not have to pay taxes on. So if I take $13,200 and multiply it by 20%, which is 0.2 or 0.20, if you will, and I take $13,200 and multiply it by 0.07, then I get, I should be able to do this with the 2, it's gonna be 264, 13,200 times 0.2 is 2640. And 13,200 times 0.07 is $924. That's how much we saved. We didn't pay state tax on that amount. We didn't pay federal tax on that amount. And the total saved is $3,564. Okay, so that's just a short lesson. So we're done. That was lesson 6.3. So now go do your assignment.